With prices crashing this week, sentiment basically at rock bottom, probably the last thing on your mind right now is the possibility that this is all kind of normal shit and we're basically going to have an extended bull run. What if everything that's happening right now, as bad as it looks, plus some other important factors, are actually just setting us up for a crypto bull market that runs much longer than people expect it to, maybe even all the way to December 2026, which sounds super crazy and breaks the four-year model. We might already be breaking the four-year model anyway, especially if that's the top, quote unquote, and it would sound very contrarian, wouldn't it? Well, don't forget that markets don't like to give the crowd everything they're expecting, and it's the counter consensus view that sometimes end up looking super obvious in hindsight. So, although this is definitely not my base case right now, I think an extended bull run is a scenario at least worth considering, maybe a bit of hopium that you need to hear right now. So today I'm going to go through some of the factors that are supporting this particular thesis, starting with some major crypto tailwinds. The cryptocurrency space, as you probably noticed, has a very short attention span, and it's usually a sell the news kind of place, meaning positive developments can get sold into oblivion and then forgotten about very, very quickly. But sometimes the good news isn't just a short-term boost. It actually puts in place real industry-altering changes, and that's what happened recently. In fact, that's what happened to a lot of fundamentals in the space. So there are now long-term tailwinds for crypto that are mega bullish. Now, of course, we're talking first about spot Bitcoin and spot Ethereum ETFs. And yeah, there's been outflows of spot Bitcoin ETFs this week, but now we've also got applications for various spot altcoins ETFs. And they do stand a decent chance of getting approved because of another tailwind, is that Gary Gensler is gone, the guy who seemed to actively hate crypto despite being a teacher of it at MIT. He's no longer chair of the SEC. He's gone back to work at university. Now we got a pro-crypto guy coming in. In fact, we have a very pro-crypto administration in the USA right now. We've got David Sachs as the AI and crypto czar, the possibility of some kind of national Bitcoin reserve, stablecoin regulation, and here's a very big one, banks becoming able to custody crypto for their clients, along with a whole bunch of changes to accounting rules, and all this together alongside with the ETFs, well, make crypto a much more accessible asset class for institutional buyers. Now, you might be thinking, okay, great, well, that sounds good, but you've probably been hearing this for a while now and hasn't stopped the markets from dumping in February. We already had the Trump pump last year. It's over. It's all priced in already. No news, nothing news coming. Everything is at the price that it should be based on current catalysts. The point is that these are structural changes. So yes, for sure, announcements and anticipation are indeed priced in. But the actual future inflows, these changes might generate something very substantial and not as easily front run, because it's the inflows themselves in size that create a new narrative that people try to front run. Movement of prices tends to be one of the best narratives in crypto. And also, speaking of institutional buyers, don't forget the big corporations and nation states take time to change course. They don't do things overnight. They don't just ape a 10x leverage along on Bitcoin. I have $10 billion, YOLO, no. Look, maybe that means that BTC reprices up in the next cycle. Maybe it means that Bitcoin starts detaching more from the four-year patterns, just follows basically as some kind of higher beta play for the stock markets, which is kind of lame to be honest, but it could be the case. The current cycle becomes lengthened as institutional funds slowly and gradually and under no pressure to sell allocate into Bitcoin. And then there are some, well, before I want to get into that, I want to let you guys know about today's sponsor, which is CoinStats, the best crypto portfolio tracker in the game to help save you both time and to manage your entire crypto portfolio all from one spot, which if you've been doing the crypto game, you're on 10 chains, 10 exchanges, you know, right? If you're like me, you've got assets all over the place, okay? The amount of wallets and blockchains and just, it's a mess, okay? It makes it nearly impossible to track everything going on in one place. Well, that's where CoinStats steps in. Because look, if you can't properly track it, you're not going to manage it as efficiently as you could, okay? So with CoinStats, the app's going to do all the hard work for you. It's going to give you all that complete overview of your cryptocurrency portfolio in just seconds. You'll be able to easily connect your MetaMask wallet, your Phantom wallet, your Binance account, your Coinbase account, your OKX account, Kraken, Bybit, wherever you are, man, as well as your blockchain accounts, your Tron, your TON, your BNB, your Bitcoin, all that kind of stuff. Basically, any platform that you're using can be plugged in to CoinStats. You just drop in your wallet addresses and basically instantly you will get a breakdown of your profit and loss statistics, including, of course, total cost, your unrealized profit and loss, your realized profit and loss, and your all-time profit and loss. So it's super simple, a great tool to help keep track of everything going on in your portfolio, and it saves you so much time. No more are you going to have all those messy spreadsheets or all of those, things you've got to manually track. It's a pain in the butt. This fixes a lot of those problems. And of course, their web version is really good, but where they really shine is with their mobile app. Even better. And here is the best part for you, okay? The guys over at CoinStats are giving you, because you're watching this today, a 50% discount. Crazy, crazy deal on CoinStats Premium. So use the link down below, check it out, and start tracking your portfolio the professional way. Okay, now let's talk about important macro changes. So a look at the Bitcoin price compared to, I know we're talking about the M2 again, but the M2 global liquidity shows a clear correlation, as you'd expect. As the money supply grows, Bitcoin, other risk-on assets soak up some of that liquidity, and the price goes up. The global liquidity cycle looks like it is currently breaking out of a wedge pattern that, if it plays out, could provide increased liquidity for the markets peaking in 2026. Bitcoin lags behind that, and the rest of crypto lags behind Bitcoin. So where does all of that take us? Well, potentially towards some kind of blow-off top at the tail end of 2026, or maybe in the first half of 2026. Predictions for M2 global liquidity are largely for about Q1, Q2 2026. Bitcoin lagging slightly behind that. Sell in May 2026 and go away, I guess. Then we have the question of quantitative tightening, or QT, and when that might end. Last December, Goldman Sachs predicted an end to QT at the end of Q2 2025, which is very soon, by the way. The Fed also kind of starting to make indications that's going to be the case. Now, previously, Goldman had thought that it was going to come in Q1 2025, but it looks like Q2 is now when it's going to happen. It's also been reported that the Fed's reverse repo facility, or RRP, is heavily depleted, down by $2.5 trillion from its 2022 peak. This emptying of the RRP can indicate a lack of excess liquidity in the system and signal an incoming end to QT, plus a potential drawdown of the Treasury General account to refill the RRP, which is a kind of backdoor to liquidity injection in the system. Plus, US CPI inflation is now back on an uptrend, perhaps requiring a more hawkish approach from the Fed in the immediate term, which would be negative for crypto prices right away, but could lead to a lengthened cycle if looser conditions come later, which is generally what's expected, that we'll see multiple rate cuts later this year. First half of the year, though, let's focus on some more specific crypto points here too, especially what's going on with Solana and meme coins, and really the missing altcoin season. Never really happened, did it? We got a little bit of altcoin action in November, December, but aside from a few runners, not that much happened. Now look, there's been a lot of recent drama around Solana meme coins, which include allegations of insider trading, racketeering, even dragging in the president of Argentina, all kinds of insider cartel bullshit. Possibly that has accelerated the recent price declines across the board. People having extreme skepticism right now on crypto. Solana meme coin charts obviously looking super heavy right now, but at the same time, it feels maybe a bit too early in the cycle for a full-blown bear market to take hold. Maybe we're more in like a 2021 mid-cycle lull, hopefully. And maybe what's happening on Solana actually has a silver lining. You see, on-chain controversy is bad, but it doesn't look like an apocalypse level event. And stepping back, of course, to try to take in the bigger picture here, Solana and meme coins might actually be getting a necessary reset, clearing out the excess, clearing out the criminal cartels and the crime, and exposing all this bullshit. And ultimately, since it takes time for sentiment to recover, extending the cycle, while perhaps also shifting attention back away from memes and hopefully back onto sectors of some damn utility, man. Real world assets, DeFi, layer one blockchains with real users and real use cases. Also, the fact there's been no full altcoin season so far may turn out to be, ironically, a bit of a positive. Having concentrated bursts of attention on specific sectors might simply be sustainable for longer, and forces you, of course, to be more rotational and take profits much more ruthlessly. Can't really just chill in spot bags and hope for the best, as compared, of course, to a raging market-wide altcoin season, which we want to happen, but may not be coming, at least not the way we expect it to. The kind that's fun, that lasts for a while. Anyway, hopefully we get something like that before everything comes truly crashing down. We enter a horrific bear market. And speaking of things crashing down, let's finish with a warning. Supercycle dangers, okay? Hopefully you can see there are tangible arguments for an extended bull market, but don't forget that talk of a supercycle is nothing new. We had meme coin supercycle talk back in November, December, and look where we are now. And believing in it when it isn't actually going to happen can get you completely wrecked. In fact, this occurred to an extent in 2021 as well. The market was in its mania phase. Super cycle was the hot word of the day. A lot of us thought Bitcoin was going to go to $100,000 before the cycle finished. It didn't. It went to 69K, and a lot of us thought that the bull market could extend into 2022, but as we all know, 2022 turned into a crypto train wreck as the Fed started increasing rates and everything changed real fast. And that took another full cycle for Bitcoin to recover and eventually hit $100,000. So the point is, keep today's theory in mind as one possibility out of many for where crypto could go from here, to make sure that you're ready to adapt to different situations, to whatever the market ends up throwing at us for the rest of the year and maybe even in 2026. Thanks for watching.